Markets sold off yesterday as FOMC minutes signaled a hold-off from increasing monetary accommodation. Commodities were hit hard as their intermediate downtrend continues. It's all about ADP and Jobs Friday. I'm Lindsey Bell, and the morning call starts right now.
Good morning. I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Lindsey Bell with TheStreet, and together we bring you the Morning Call Express. Scott, yesterday's stocks got hit hard after the FOMC released minutes, indicating that monetary easing was not really a part of the plan going forward. How are you setting up trades today?
Well, yesterday was a very, very choppy day, and I know for me, I got stopped out of a lot of positions. Market started off weak. It intensified after the minutes were released. I think traders were a bit concerned that they're going to stop, juicing the market, so to speak, until we go lower. So obviously, we're going to have to go lower for them to come in and be accommodative. So anyway, it's like what came first, the chicken or the egg? But the bottom line was, a lot of stocks broke underneath the surface. Some of the leaders were still stronger. But overall, I think today's action is going to be very key as we move forward to test this intermediate trend line.
Financials, they have been strong as of late, and yesterday they were able to hang in there. What are you doing with that group of names?
Well, that's a group that I'm going to watch for two different reasons. First of all, the financials have been leading this market since the beginning of the year. You've had stocks like JP Morgan leading the way, even Bank of America, alongside. And then you talk about some credit card stocks. They were really strong yesterday. They actually closed on their highs as the market was still weak. So I'm going to look to see if there's any leadership from that group. But first, let's take a quick look at the chart of the S&P. The S&P, it's very important. We talk about trend lines. Here's that macro trend that's come into play. It hasn't even been tested since the December 20th gap and go. Here's that intermediate trend that got tested in late February. Okay, came down to what was that? 134, 1340, made new highs. And now we're still in this trend. But today we're opening below yesterday's low. If you want to take a look at the quote chart to write down, yesterday's low is 140.43. So see on the open, if the market can't come back and have like a 60-minute close above 140.43, you better watch the 20-day moving average. The 20-day moving average is 139.83. If we close below the 20-day moving average, I would say you have to even be out of a little bit more of your longs, because that could signal to me that we're going to have a bit of a deeper correction. And maybe finally we get that 4 to 7% correction that everyone just keeps talking about.
So if you get the correction, what sort of names do you go into? Do you go into the strength of the financials? Do you look at retail, some of the names that we've seen strong trends in?
What's really good about corrections, if you're not caught in it, you see the future leaders of the next move. And the banks have been strong, like you mentioned before. So if we look at JP Morgan, let's look at some levels here. JP Morgan right now, you take a look, you'll see that it tried to break below the 10-day moving average yesterday before rallying back. Here is the 20-day. I would watch this area. This level is, write this down, 44.44. I know Stephanie loves this stock. I love this stock, but you don't always have to, pay for it so high up. So, I would say this is one level which I would want to see hold. Maybe if you sold some strength yesterday or you got stopped out at the 10-day, here's your level to buy. And then a really, really big level, which would be very compelling to buy. If you want to write this down as well, this is your 42.93. And if you flip the coin to Bank of America, just for psychology purposes, because a lot of the market owns this, if you were to see this 940 level give way, we talked about the lower end of this channel, you're going to see some more corrective type action. I would write down the moving average right here at 906. And I think that this Bank of America could be a really good buy, a little bit under 9, right around 880. So that's where I would look to buy that one back.
And you mentioned MasterCard and Visa both hitting new highs yesterday. What do you do with those? Do they keep up the momentum?
Well, it'll be good to see if any stocks could actually buck the trend, and they bucked it yesterday, but this will show me how weak the market is today. If they can't take MasterCard and Visa positive today, that's going to show me we could have a trend down day. So I'm going to look at both those stocks to see if I can get a negative to positive move. Same thing with Apple. Apple obviously has been one of the strongest stocks out there. When it came off in the middle of the day, it held the prior day's high, that pivot high of 621. So today, with it down $5, as a trader, I'm going to look to see if it can go positive. If it can go positive, maybe tech, has a little bit of a rally. If you look at here at Apple, just at the chart, you'll see, right down yesterday's low. Yesterday's low is 622.51. As long as it stays above that, I think the correction could be muted. We get below that and can't get back above it, you could see it move down to the 612 moving average, which would bring pressure on tech.
Well, we'll cover all that and more in the long version, so stay tuned.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.